there, and thanks for listening to the Adulting is Easy podcast, where we make adulting easier by making money easier. This is your host, Lauren. And I'm joined today by Mark Rusin, CPA and owner of Rusin Financial, which is a company dedicated to not only educating, but empowering investors to become their own money managers. They do this through one-on-one coaching, to which they have a 6-week investing accelerator course where participants work one-on-one with Mark to develop a customized investing plan. But they also have short-term workshops as well. You can find Mark on X and Instagram at @dividend_dollar, which I will put in the show notes. You can also follow along with Mark on YouTube at Mark Rusin, CPA, where he publishes 2 videos per week and does 1 live show every Thursday. Thank you for joining me, Mark.
Lauren, thanks for having me. Lauren and I have known each other for, what has it been, like a year now? So it's good to finally get on your podcast.
At least.
Yep,
and right about the time this is coming out, we'll be meeting each other in person at FinCon, which is pretty cool.
Awesome. Looking forward to it.
All right. So our goal for today is make adulting easier for listeners by discussing a personal finance topic, since managing money is a big part of adulting. So today, Mark, we're going to talk literally about investing, and because that's like a lot of what you do. So I thought that you could educate us on that. And I was wondering if you could start off by defining literally what is investing.
So investing can be taken, a number of different ways. What I like to focus on, is investing in the stock market. Obviously, as you know a lot, there's investing in real estate. There's ways to do that. There's ways to invest in real estate within the stock market as well. So it's just really a way to put your money to work. We have the key word these days is inflation. So it's allowing your money to work to hopefully outpace inflation. We haven't seen that the past, few years here with the record high inflation numbers. Hopefully those are starting to come down. But in just the thought of with investing is a way to put your money to work to hopefully provide for higher purchasing power moving forward.
How does it differ from speculating or gambling?
So there's a track record you go off, if you're gambling, it could be a 50-50 chance if we're going, red and black on roulette or something like that. But I think when it comes to investing, there's an actual asset, actual business behind the curtain per se. So if you want to invest in something like Apple has a track record that you could look at. You can go look at the financials, see how fast a company is growing instead of just more of a shot in the dark per se. So that's why I prefer, obviously, investing is there's track record, there's valuations you can look at. So it makes it fun from that standpoint as well.
Yes, thank you. There's definitely a difference between gambling and investing. So I just wanted to ask about that. So who should be investing then, Mark?
Really everyone, but it doesn't just start with investing. First, if I were to ask, should I start investing right now? I would say, well, where are you at with your finances? Do you have, a high yield interest that you should be paying off first? Get your finances in order, get the right mindset, and then start moving towards investing. Because if you have, 9-10% debt yield that you're paying and you can only go earn 5, I don't want you to be putting your money into the stock market yet. It's just really focusing. And when I work with clients, it's where are we at with our finances right now? Do we have a 6-month emergency fund right now to utilize first? Because we never know when those things are going to come up, whether it's a health related issue, a family issue, a car issue. You want to be able to have that emergency fund. And there's a lot of folks that we know in the US right now that are living paycheck to paycheck. So you want to have that something to fall back on when the unknown comes. Then once you have all the finances set up, that's when we can start moving towards investing. And the people I work with, we put together a customized financial plan that'll, it's going to be customized to you. Not everyone has the same strategy or the same risk tolerance or same time horizon. So, first, to answer your question, get your finances in order, then we'll start moving and talking more about investing.
So these financial plans that you're creating, these custom ones for people, what are some examples of things that are in them?
So the customized plan, again, they're going to be customized to you, and it's going to be based on, what's your risk appetite? Are you someone that wants to, push your account as fast as it can? You're going to be investing in different types of stocks and ETFs. Or there's the folks that come to me a lot of the time because they follow me on YouTube or whatnot and know that I'm a dividend investor. And they say, hey, I like that passive income that you talk about a lot. How do I set up a plan to where I can have X number of dollars in passive income each month? So we set up those plans and say, okay, well, let's start with a strong backbone. And it's usually strong backbones to a an investing plan starts with ETFs, index funds. When markets get choppy, you want something to fall back on. And usually an ETF or an exchange traded fund think of it as a basket of stocks that you have ownership in hundreds or even thousands of different stocks that are out there today, rather than investing in just one individual stock. That obviously has a lot more risk, because if, say, you're investing in something like Starbucks, they have a high exposure rate to China. China's not doing well. We've seen Starbucks stock come down. But if you invest in something like an S&P 500 ETF, you have an ownership percentage, a piece of 500 different companies. So it really comes down to each and every person. I have the folks that are high growth folks. They won't be focusing as much on safety. They just want to take more risk, high reward. And then I have a lot of folks that come to me and say, hey, I don't want to lose money all that much. I want to be very safe. Okay, so maybe you're not going to outperform the market each and every year, but we're going to focus on, preserving your wealth. So that's kind of the plans differ, and the strategies differ for each person. So that's what kind of makes it unique.
Have you had anybody where you thought they were a certain risk tolerance level and they weren't?
I
Like
have. I'm
something
actually,
happens and like they're like, yeah, I can definitely handle some risk. I will not lose sleep at night if my portfolio drops. And then like you both realize, oh no, that's not true.
yeah, it's funny you asked that, because I'm actually working with an individual right now that he's brand new to investing. It was like, no, I'm just all about growth, want to take a ton of risk. And then, lo and behold, we, going back to September, which is historically the worst month for stocks in the out of the entire year, and we saw a big pullback in the entire stock market. Individual stocks pulling back, the indexes were pulling back, and everything. And seeing that money being lost, he goes, okay, maybe not so much risk. And we've kind of tweaked the strategy moving forward. Like, okay, maybe the passive income stuff, it might be slower growing, but it also is slower to fall usually, not every time. But we've kind of tweaked it as we've gone through our 6-week course. So yeah, it's funny you asked that, because we're going through that right now.
Well, that's important. I think I realized that I actually had a higher risk tolerance than I thought during the March 2020, April 2020 contraction, the COVID contraction of the stock market. It dropped like, I don't know, like a third or something. And I felt
Right.
nothing. I felt a little relief because I was like, now I know what this feels like, because, I was 18. I turned 19 the week Lehman crashed. And so my whole adult life was this bull run. And so I was like, oh, this is how it feels. And I just felt like, man, I was expecting this. Thank you so
Right.
much, universe, because I was expecting the stock market to go down at some point while I own
Right.
stocks.
Yeah, it's when you're a long-term investor, you, in a way, even though it could sound weird, you kind of like those pullbacks. It gives you an opportunity on a bunch of stocks that you were looking to get into. And a lot of those folks, we saw that V-shape. We dropped down 30%, but we quickly regained. There was a lot of buyers that came in like, holy smokes, that stocks are on sale right now. And when you're looking at high quality stocks, and for me, I'm not a big risk taker. I'm not going in small caps or penny stocks or anything like that. But seeing some of these high quality Microsoft, Google, Amazon of the world trading down at these levels that you haven't seen in a number of years, you at first you thought you missed this big bull run, and then you got at the snap of a finger, you got they look like they're on sale. So if you're a long-term investor and you're always just looking at the market, whether it's periodically on a quarterly basis, monthly, you don't have to be in it every single day, but you'll see the opportunities come up every once in a while, and you just got to be ready for it.
I am definitely more known for real estate than my stock investing prowess, but about 30% of our net worth is in stocks. So I do no individual stocks whatsoever.
Yep.
But yeah, so though that month, my husband started putting $1,000 a week in the stock market, and he's done that probably 45 out of 52 weeks for every single year since then. So
That is
he
awesome.
really was like, "This is awesome. I'm
You
getting
got
it
into it.
now."
I love it. That is awesome. Yeah. I mean, for me, it's really taking that dollar cost averaging approach. So, you don't timing the market's a tough game to win. So, if you just constantly add whatever you have, a couple $100, $1,000, whatever it may be. And if you just keep adding fuel to the fire, especially, you don't have to invest in individual stocks. You can simply invest in the S&P 500 ETF or other ETFs. There's actually thousands of different ETFs out there. And it's more of that hands-off approach. You don't have to worry about being an expert in the stock market. There's so many choices out there. And that's what I love about, investing in the stock market and working with individuals, because I can find a plan that works for any type of individual.
How are you handling retirement accounts for your clients?
So I don't manage any money, but in the courses we go through the different types of retirement accounts, kind of go through the pros and cons for each of their situation. If they're high net worth individuals that continue to see their their income continue to grow. We talk more about the Roth IRA, and they'll go, okay, well, my income limits are too high. Well, then we'll introduce the backdoor Roth IRA. It's something that, I utilize myself. It's a safe, not only a safe way, but a legal way to utilize a Roth IRA because there are income limits. But so it really comes down to, different situations. Where's your income? Where do you see tax brackets going? Do you see your income continuing to grow each and every year? So we just kind of go through a set of different topics that we kind of discussed to determine which is the best route for them.
How are you handling it when people are interested in real estate?
In physical real estate? So I have a lot of people that come to me and talk about physical real estate. I don't teach any of that in my 6-week course. I should probably just, send them to House Media here and to talk more about that with the experts. But for me, when it comes to my real estate exposure, obviously I have my own home and we want to expand our real estate portfolio. But my way to invest in real estate is through REITs. I kind of carve out about 15 or so % of my entire portfolio dedicated to REITs or real estate investment trusts. It's, investing in a company that already owns, thousands of properties out there. Think of something like Realty Income. They pay a monthly dividend. They're down like 20 some % over the past year. So it's, we're looking at these like decade lows in a high quality stock. The higher interest rates are really weighing on not only home buyers out in the physical real estate market, but it's weighing on REITs in the stock market. So it goes in comparison there, but that's kind of my way to get real estate exposure right now. But I don't think there's a one way or the other. You have to go REITs or you have to go physical real estate. I think a good blend of both is a great way, and that's how I utilize real estate.
I one time met with a financial advisor. I was thinking, okay, this is before I really took a deep dive into financial planning and personal finance and learning about it myself. I was like, all right, I'm gonna get somebody to help me. And I was like, all right, I just sold a property. I had like $150,000, $200,000 cash, something. I'm like, this is for my next property. I'm going to tell you about it, but it's for my next property. And he comes to me and he's like, well, you should invest it, then take a margin loan on it. And then like invest that loan on that and like basically leverage my stocks into my leveraged real estate. And I was like, dude, that's not what I told you. Like, you're not listening to me,
All right.
So do you think people should, that's what I asked, that I mentioned that to ask if people need financial advisors?
I'm a kind of I like to say a financial advisor's worst enemy, because what I'm doing is focused around education and empowering folks. If you go look, and I have plenty of financial advisor friends, so they'll probably hate me if they heard me saying this, but it's really just understanding, you don't have to be a hands-on investor. You don't have to be in the markets and be some, expert. You can build a portfolio that has, 5 or 6 stocks and ETFs in it, index funds. You can go all index funds and ETFs, and that's proven to be a great way to invest and build wealth for generations. My focus is to help people realize that, you can do this. You can, if you go through this course, what we teach in the 6-week course, we're going to show you the ins and outs of the stock market, develop a customized plan, put together an action plan that fits you, and show you that how you can be your own money manager, going forward. I ask them, at the start when we're doing, these discovery calls, I say, hey, do you know, if you're using a financial advisor right now, do you know exactly what they're investing in? They say, well, no. I said, well, go ask them. Let's check it out. Every time they come back, oh, we got an S&P 500 ETF. We got a couple other ETFs and 3 or 4 stocks, and they're not in there, trading for you. They have hundreds of clients. They're not, I know people think that, but they're not in there trading for you every single day. They're really just, okay, Joe Schmo sent us another $1,000. Let's throw it in those 5 stocks that we have. You can do that yourself without paying a percent or 150 basis points, every year. That money adds up. And if you just, get education, understand how the stock market works, and just get a solid plan, you can do that hands off, where you're just investing $1,000 each month or whatever your number may be into those same exact 5 stocks for generations, and you're saving yourself 150 basis points. You don't have to get sophisticated with things. So there's a need for them in certain circumstances, but if you're just a regular person like myself, I don't think they're necessary. Maybe if you came across $100 million or something like that, and you're like, okay, maybe I should give a little bit to a financial advisor and I'll do some myself. Sure, if you win the lotto or something like that. But for me, I don't think, the regular folks like myself need them per se. Just a little bit of education and some direction. I think you can really, do well for yourself for years to come.
I have one friend out of all my friends and family and my cousins, that I think does well with a financial advisor because she's a little bit emotional. And I think having a person stand between her and emotional financial decisions is a good move. How do you handle emotions when you're dealing with clients?
So one of my slides in our 6-week course, we talk about it and we say, I often say it even on social media, emotional investing is a losing strategy. So if you know you're an emotional person, you can see, you can't stomach seeing a stock drop 10%, or going back to what you were talking about with the 2020 lows when it dropped, 10%, then 15, and the next day is another 10. It's like, okay, this hurts. Let's sell at the bottom. Emotional trading is a losing strategy. So if emotions start to creep in, it's really, that's where that education kind of starts to come in. And if you have a high quality company, okay, the stock's down 20-30%. Did anything underlying change with the specific company? Did we sell off a section of the business? Did something completely go wrong that we had to shut down a section of the business? If there's no underlying issues, it could just be your regular ETF or fund manager, hedge funds that are just moving some money around. It doesn't mean it's going to stay down forever, but that's where, if you understand, looking at different metrics, understanding how to read some of these, simple earnings reports, not going through a 170-page report. It's just reading about 5 to 10 pages that they put out. You can learn a lot about a business looking at a cash flow statement and just some MD&A, which is the management discussion analysis section, where they talk more about the business. And if you don't see anything underlying that physically changed, there's always I always say, have a thesis, have a reason on why you're investing in a particular stock. Warren Buffett always says, make sure you understand what you're investing in. He doesn't invest in companies he doesn't understand. I mean, he drinks Coke and eats McDonald's every day. So I think he understands both of those and has both of them. But, if it's a sophisticated business, you don't understand it, probably not a great place to put your money.
How that man has lived to see 90 doing that. I
That's
mean,
that's
it
the health
like
code.
it flies in the face of reason. So if someone's listening, Mark, that has been learning about investing, thinking about investing, has their personal finance house in order, meaning no bad debt, they've got their emergency fund, they have their foundation set, but they haven't pulled the trigger yet, what would you say to them?
Jump in, take it slow. And, it always starts with understanding and educating yourself first. But the way, I always say that investing is very similar to relationships, or whether it's exercising. It all starts with having a strong foundation. You want to have a strong foundation in your relationships, whether you want to have a strong foundations when you're working out. Same thing goes with a stock portfolio. That strong foundation is going to be something you can fall back on, that we talked about earlier. So like an S&P 500 ETF. I always like to see folks, and I don't give direct financial advice, but for me, the first thing I invested in, an S&P 500 index fund. And I just started loading money into that until it became a sizable piece of my portfolio. If I were to pop up my portfolio right now, the largest position you would see is that same S&P 500 index fund. And I also have an ETF that I just add to regularly. Just throw, a couple $100 each and every week in there. And then I sprinkle other stocks around that. I have a lot of individual stocks myself. I'm a very hands-on investor, but also have a lot of ETFs and index funds to fall back on. So I think that's, building the safety net around that, because there's nothing worse for a new investor. Jump in the stock market on March 5th of 2020 and see it, boom, 30%, you're gone. I mean, I would hear everything about the stock market's a scam. We need to get out of here. Build up the foundation first so that you have an investment in 500. Diversify your portfolio, and just get started at a slow pace. While you're educating yourself, you can still be, chipping away at building that S&P 500. So that's always the kind of topics, and I don't want to say advice that I give, but what we discuss.
Yeah. Yep. And that's how I started as well. My 401k, the first thing I ever invested in was the S&P 500. And as far as my stocks go, outside of my physical real estate, that's my biggest holding. So, Mark, is there anything else you'd like to add before we wrap up?
No, I just appreciate, coming on the podcast and having this opportunity. If anyone's ever interested, I have a 6-week investing course, the Investing Accelerator course. So we go through, build out customized plans and action plans, and kind of just educate folks. So it's always been a passion of mine, not only investing, but helping other families build that generational wealth. So thanks for having me on, Lauren. I really appreciate it and look forward to seeing you soon.
Yep. Thank you so much, Mark. And everybody, you can follow me on Twitter at Adulting is Easy or Instagram at Adulting is Easy Real. YouTube channel also at Adulting is Easy. You can email me at realadultingiseasy@gmail.com. Check out the show description for where to follow and connect with Mark. If you like this episode, you might also like episode 142 with Budget Talk about investing for your kids, and episode 121 with The Wealth Dad about index funds, the quote unquote easy way to get rich. Thanks again for listening, everybody. Hopefully, Mark and I have made adulting a little easier for you.